Welcome to our webinar today. So if you have participated in our webinars before, and I hope that you have, you know that we like to talk about virtual CFO services, advisory services, things of all that kind of topic. That's what we're doing today. And today is very much around what if you wanted to launch your virtual CFO practice and you want to do it this year. Okay, let me do a couple housekeeping items. We'll go through introductions and then we will jump right into the content for today. So today is a 1 credit hour course, 50 minutes. We do have 3 poll questions. I probably will not announce when I'm launching those poll questions, so we need people to pay attention. You do have to answer all 3. So we will give out CP certificates. So if you meet that within the next week, you will get those out. And please use the question function for Zoom. So like most webinar speakers can't speak to us. We can't hear you speak, but if you ask a question, we will watch those closely. Most common question we get is, were there slides before? And can I get a copy of the slides and can I get the certificate? So there were not slides before. By tomorrow, we will go ahead and send out the slides. So you've got the slides on here with all the content that we're delivering to you today. Okay, so presenters, let me introduce myself, Tom Wadelton. So my full-time role is Virtual CFO with Virtual CFO by Summit, or Summit Virtual CFO by Anders. Sorry, we've got new branding going on. So in that role, I currently have 16 clients. I act as their business consultant and advisor, also play the role of CFO. A very large majority of my time is spent directly with clients, and we'll talk today about what those pieces are. I'm joined by Jody Grunden. So Jody was one of the co-founders of Summit CPA Group. I'll give you a little bit of history of the company here in just a second, but he has played that virtual CFO role for many years, continues to work some with clients, but now leads that entire practice for the Summit Anders team. So Jody, thanks for joining me today for the presentation.
Yeah, looking forward to it, Tom.
Okay, so a little bit about our firm. So you see our 2 founders, Jody and Adam. So back in 2002, started the firm, very much a traditional CPA firm doing tax and some audit work and some consulting kind of work that they do, but very much on the traditional side. Pretty early, and now coming up on 20 years ago, started offering CFO services, back office accounting services to our clients. So that became a growth area that we had. In between that time, we really said, okay, vCFO is going to be the main service offering that we have during that time. In 2013, then we became a fully distributed firm. So no more office for us. And we have clients all across the country, some that are outside the country, and the same with our employees. So a ton of flexibility that now many companies enjoy, even some on just a hybrid basis, but that's where we are for being a totally remote firm.
Yeah, Tom, to add to that, we from 2004 to 2013, we were pretty much generalists. We took on any client, no matter what industry they were. We didn't really focus our marketing on any particular industry. And it was around 2013 that we started focusing on creative agencies. And with that, when we started focusing on the vertical, we actually realized a high, tremendous growth amount. We would pick up from 2004 to 2013, probably 4 to 8 clients a year. We're high-fiving and we're pretty happy about it. And once we started focusing on the vertical and really getting to know that vertical and becoming thought leaders in it, we were picking up, 2 to 10 clients a month. A huge difference in that. And so the narrower we got, and we'll talk about that, the more clients we picked up. But that's when we started doing that, and growth has doubled in size every 3 years. So from 2010 to today, actually, we've doubled our size every 3 years. So high growth, high vertical. So we verticaled our niche as well as we verticaled our service line.
Yeah, that's very helpful. So then in 2022, we've joined Anders CPAs and Advisors. And now we're Summit Virtual CFO by Anders as a service offering. And Jody, you just mentioned a lot of growth. A big part of this merger was wanting to see that growth really accelerate and saying, with a larger firm, is there that opportunity there? And I think it very much is. And now we've got this hybrid workforce where our team remains completely remote. The Anders team is in St. Louis, and many of their team members are working in the office, and they also have days where they're working outside the office area.
Yeah, and I think to put it in perspective, from 2002, we bootstrapped the company, no clients, and really kind of started building a client base. In 2022, when we merged, we were at about $10 million in total revenue with about 50 employees. And I would say probably 100 and a quarter, somewhere in there, clients. And then once we merged with Anders, now we're at about 75 team members throughout the U.S., about 175 clients roughly, and we'll do about $14 million in revenue this year. So the growth, again, has continued And our goal is to hit that $50 million mark by 2026. We're hoping to do that. And everything that we're talking about today is what we've actually put in place. And so we want to share that with everyone to kind of open up the under the hood and kind of show you here's how we do things, and here's what we're doing. Here's what really kind of is making that flywheel turn so fast for us. And hopefully each and every one of you can pick up a nugget or two here to help your practice do the same.
Yeah, I hope so. So I'll remind people I do have the first poll question up, and I'm going to close it here in just about a minute or so. So go ahead and get your answer in if you haven't done that. Okay, so here's how we're going to cover today's session. We'll talk about what is the role and kind of the key tools, the way we break down the CFO role. And then if you're going to try and launch in 2023, how do you get this thing started? What do you suggest? And then the third piece, how do you deliver the vCFO services? So as we think in terms of role, think of it in these kind of groups, and I'll go through a slide with each of these, but you've got the tools, you've got the people and the process, and then you have to be able to scale all of these. So if we dive in and look at these as pieces, when we look at pieces, we're talking about the needle in the haystack. I mean, what is the right person to do this kind of role? And there are multiple roles that you have. Part of it you can think of in terms of process. So you really need to have a good hiring process. What are the kind of people you're looking for? And then do you have a good way of trying to seek out those people? You can see some of the tools we have below. So the first couple, like the EQI, Colby, and Working Genius, those are really assessment tools. We've done a fair amount of work to say, okay, what is the kind of role for this particular role? What's the kind of personality or work trait for people that are really successful in that role? And we do some of these assessing of people to try to make that best fit. Like all firms, we've had people come in where we don't feel like that person is working out. We've had ones where we think that they're doing really well, and the person is saying, this isn't really a fit for me. The better we can find that before we bring someone on board, the better off we're going to be.
Yeah, and I'd like to note also that just because somebody is a great accountant doesn't mean they're going to be a great advisor. And then that was one of the mistakes we did a long time ago. We just assumed that, hey, this is the best accountant we have. And so they're going to love doing this advisory stuff, and they're going to be really good at it. And we found out that we lost quite a few really good people because we put them in a role that they really weren't, really wasn't something that they enjoyed or they really weren't good at. So be careful when you're promoting people within and when you're bringing people outside that they need to know the accounting, they need to know the advisory side, but make sure that this is something that they really want to dive into and excel at.
Yeah, excellent point. Okay, so now you're bringing a person in, so then how do you onboard them for being successful? And so this includes the training for things. How do we start giving people a certain workload? And then how do you make sure people get feedback along the way? Let me focus on the feedback initially. When we bring someone in, starting every 2 weeks at the beginning, and this is for the first couple of months, we have a feedback session with that person. So the people that are working with Emmy and that person, how do you think it's going? And they're getting feedback. And we use a start, stop, and continue kind of model for doing that. And the real intent is not to find yourself 4 months down the road with sort of a hallway conversation around, I don't think this person's going to make it. And that person isn't even aware of things that maybe they could fix. So very early on is that feedback, including from them saying, okay, where are you and where should you be? And that continues at a 90-day and a 6-month, and then you get into the 1-year process. And so I think that's one of the things that we do really well in there. We also have trainers, and we have recorded training, and we have individuals saying down, here's how you do these things. And we're giving people clients a little bit at a time as work builds up so they can get good at doing that.
Yeah, I think the important part of that is you have to be really candid with the new team member.
Yeah.
If you're just saying they're doing great all the time, and then 90 days later you let them go, and they really haven't had a chance to make corrections like Tom had mentioned, I think you're doing a disservice. You're not really holding probably to your values of your company. So it's important that you're candid with them. Doesn't mean you're beating them up. It just means you're just going through and saying, hey, make sure you adjust your camera this way. When you're on, make sure you move the things and out of the background. Make sure that when you're talking to a client, X, Y, Z happens. Those are the type of things that they can learn from and really improve on, because no one's going to come in perfect.
Yeah, I agree, Jody. And I've given feedback to our own team members where I've said, hey, I sat through, so I'll pick you. I sat through Jody's 2-week review, and it sounded like you thought he was doing great. Yet you told me on the side you're really concerned about how he's doing. And so it can be you're not doing him any favors by sort of sitting there and telling him good things and then behind the back seeing significant things and sort of this. Wouldn't you think he would want to know if he's falling short. And that usually does really help, but people want to get better. They don't want to continue doing things incorrectly. So, okay, then you're on to retaining great people. So what are the things you have in place from a culture standpoint, from a pay standpoint, from paying attention to people to make sure that people stick around? That this is when you really find the value, when you've got people who have been here 3, 4, 5, 10 years, and they're doing it really well versus constantly feeding people into kind of a machine. And one of the things we do around that is having a people operations strategist. We have Josh on our team who does that. And Josh stays really well connected with the team members. And I've told many people a difference from when I worked at a large company versus here is my impression of HR at the very large company was they were the rule people and they spend a majority of their time on problem individuals. We have to do that as a company, but where Josh spends his time is coaching people and listening to people and really helping them with all team members to do a good job. And the CFOs also have a coach who does that. And so I've not been in an organization where people spent that much time really trying to say, hey, what issues do you have and how do I coach and help you do better at that? To where we enjoy working with the HR team and it's not just the compliance and kind of the police around that.
Yeah, I think that was one of the biggest, I guess, when you have, when you have those gold hires, our gold star hires. I think that was one of the biggest things we did. Now, this is probably 8, 9 years ago when we brought our first people ops person in, because it really kind of changed everything. We're a fully remote team. We don't get a chance to hang out with each other and maybe gossip a little bit or whatever that might be. But when we brought in a people ops strategist, like we brought in Zach at the time, it was great because he was able to listen to us, help us out, walk us through issues that we might have had with people, we might have with clients, might have with just the overall company in general, and really kind of be a sounding board, a confidential sounding board for those individuals. And I think it really helped our employee retention significantly. And I think if you ask anybody on the team, they really appreciate having that person. Now, I will tell you that person, like Josh, knows nothing about accounting, and so that's the one thing. They're not training people on how to do stuff. They're actually helping people on the soft skills.
Yep. Great point. Okay, so we've talked through people. Really important to get this right, and then let's talk strong processes. So why do we do this? We want consistency and accuracy. And one of the things that really made an impact on me, and it comes from Jody's partner, Adam, when Adam's saying, hey, one of my biggest fears is that I'm telling a client when I'm selling, here's what we do. And then the fear is we're not actually doing that we're not delivering it the way that I'm describing for people. So having that consistency so that everyone's getting kind of the same thing, you can imagine how much training improves when people are doing similar, and then making sure that things are accurate. So that's the main reason that we do it. All of our accountants, the whole team, the CFOs and accountants, this is important. And what we're talking about is really around like month end. You'll see the things up there, financial statements, what are the key things that we're saying we need to do this in a consistent way and make sure that it's done correctly. And we talk about 80% standard and 20%, we use the term snowflake. We know that clients can be different. And we will try to get them to follow the standard in places where it's varying. We can vary it a little bit within there, but a lot of things from these activities are done consistently.
Yeah, I think processes are really, really, really important. It's the we founded the company under the book E-Myth or Revisited, and a great book. Highly recommend reading it. And they talk about the process has got to be consistent. So like Tom mentioned, Adam's worried about, us promising something that's not happening. I'm worried about that Tom is doing something completely different than Kristen or to Bob or to Dusty or whatever. And I want that to be fairly a similar thing so that, if Tom decides or gets a promotion and he's no longer dealing with clients, when Dusty comes in there, the client's not relearning a really weird way of doing things or doing things completely different or using different software or whatever. So we try to keep things super consistent so that we can move people in and out of different engagements without having the client, not being a burden on the client.
Yeah, I agree. And Jody, I remember well when you and I were at the DCPA conference a year and a half ago, we talked to one of your peers who went through some of his resume as we were chatting, and it was very impressive while he had come in and done CFO role and part-time CFO and consultant. In my mind, he was the man. And we quickly got to a place where he said, I can't scale this because I am the only one in the company who can do this and no one knows how to do this. And to me, it was, wow, he was sitting at a place a little bit older than us, starting to think of retirement and thinking, I can't because I can't pass this on. And that's where a lot of these processes come in, that you can show other people how to do it. And you don't have to totally be that unicorn and be the only one who can do something.
Mm-hmm. Yeah, and I think the biggest thing right now, we're using a program called ClickUp to really dial processes in and really keep everything uniform with checklists and so forth to make sure that nothing gets dropped.
Yeah. Yeah. And so you can see some of those tools on the bottom that Jody mentioned, ClickUp in there. Reach reporting is how we do a lot of reporting things. Procedure flow, how do you do flow charts and the flow of things that are in there? And then, of course, the different ways that you can interact with clients from a meeting standpoint. So we've gone through people and process. And then, sorry, you've got the tools that we mentioned in here that are so important. So what are those key tools that people are using and getting people to use them on a consistent basis? Okay, so then the specific role of the VCO, as Jody pointed out, I dressed up today, made sure I wore the same shirt that I was going to be in this video that we had here. But what is the actual role that the person's playing in here? And we think this is really important. Sorry, let me get distracted real quick with the question. So Jody, you mentioned a book in here, E-Myth Revisited, I think is the one that you were talking about. That was the book. Yeah. So excellent book that we have. In fact, I've got by Michael Gerber is the name. So E-Myth Revisited, Michael Gerber is in there. Okay. So what's it mean to be advisor? And we can think of these as sort of progression of these couple things. So that consultant, and you're seeing that, consultants often take the client's information and kind of feed it back to them. Here's a way you can look at your business differently. And it's a really important role. Where we think it advances, though, is being that coach. And we like to say that we are not the hero, that your client is the hero of this journey. Where is it that they're trying to go? That you're coaching them along the way and saying, I want to be beside you as you do this, and I'll advise as we do that. And then moving to that advisor. And I love this image with the person on the phone, because we want to be the one that they're calling and saying, hey, I've got this wild idea. What do you think if I blank, if I add a person, if I get rid of this whole line of business, if I take cash out, whatever that is, we want to be the one that they're calling and saying, I value your opinion on this kind of topic, and we make ourselves available to them during that time.
And I think the best thing is that when you get a client, and let me know if you disagree with this, but when you get a client, and within 5 years, that client ends up leaving. And the reason they're leaving is you got them to a place where they could sell their business, merge into another company.
Yes.
They could achieve the goal that they want to achieve. Yeah, we lose a client, but I think that's a job well done. And I think that's, that should be the goal that everyone on this call should have.
I do agree with that. And that we've got one now that's transitioning out, and they have grown 80 times probably what they were when we first started with them, well beyond what we say our niche is. And I still think we provide great service, and they do too, but they have honestly grown to the point where they want full-time in that role. And for a long time, it's going to be one of my biggest success areas of saying, I help them grow, and I'm hoping they'll be crazy successful after they've left and worked with us. And we've had ones that have sold their businesses. And so that's another good reason why people sometimes choose to leave us. So this advising ends up being really important to us. You'll often hear us describe ourselves for clients not as, hey, I'm their accountant, I'm their advisor, I'm their consultant, I do this kind of role. Okay, so let's talk about how you get started. So you want to deliver these services. So what do you do to try to really get this started? So how are you going to create kind of this service that's in there? And so it really is looking and saying, what's the kind of client that you want to work with, how often, and then what's the scope of those services? So the client will mention just a second around niches, but we focus on digital agencies that are in that $3 to $5 million revenue range, and it's a service-based business. And that's really the kind of the primary client. We work with all sorts of clients, and even with that as our focus, that is about half of the clients that we have, a little bit more than half of the individual clients that I work with. But that's really key.
And I would say that the lowest we pick up would be $1 million, and we've identified that as the amount that, hey, if we're below $1 million, then we're the biggest expense, and we don't want to be their biggest expense on these weekly or monthly calls unless they're in high growth mode. And so there's a lot of different qualifications that we look at, but if they're below $1 million, it's very rare that we are going to take them to even a quoting stage. And then the same thing goes if they're over 20 million, then we're looking at saying, how can we really help this client, based on the service levels that we're providing. So we're looking at that $1 to $20 million range, our average client being about 5 million. And so it varies within that range. Now, can we take a client from 5 million to 70 million? Absolutely. And we can grow with that client, add more resources. But going into the engagement, we want to make sure that we're actually satisfying that role. Now your scope, your client might be, hey, I want to take people from 20 million to 70 million. Here's what I want to provide. That's great. You just have to make sure you identify that and make sure you're providing the service level to be able to effectively manage and operate that client.
Yep. I agree totally. And where so when you mentioned the revenue piece, Jody, I think it's important to know what people can afford, because we coach CPA firms, and often we'll hear people saying, one that I think of loves working with life coaches. Wonderful. But if the life coach in your mind is an individual who's providing service, they're probably not big enough to be able to afford you. And so if your approach is, well, then I'll charge them less, you may look and say, okay, how many $10,000 a year clients can you really service? And if you can do it, great. I think we found with the level of service we provide, that's not enough. We don't have enough people to do that. And some of that comes into how often are you able to meet with people. So we'll show you in a moment when we do, but what's that frequency that you're going to be meeting with people? Because that's a big part of your time. Once per month versus once per week is a lot of time. So thinking through that piece. And then what's the scope of services? Are you willing to do back office services and transactional kind of things? Are you going to be doing forecasting and strategy work? Is tax included? Kind of what are all the things that are going to be included in that service? And if you're not providing them, do you have someone that is? Maybe back office is one you're saying, I partner with someone. If I can't do it, but I know someone, I can get you connected, could be an approach you would use. Okay. So then this niche, and I mentioned our niche is digital agencies. That was one of our questions that came through from people. Why would you do this kind of a niche that you have? And it's really that kind of brand level clients that you have. What is the type of client we work with? You're providing that you significantly increase what that demand for service is. I luckily work with enough of my 16 clients within that niche that I've gotten to know them well. And as people say, have you seen this before? Usually I have. And when I haven't, I've got my peers across the company where I can say, hey, have you guys seen this kind of thing? And people know that, and they will know if you speak that kind of language. So as you think of that niche, you may think of your existing clients and say, where are you really good, or where do you want to be good? So people know you're the one when they start talking about this type of a business that's in that. That second bullet, I think, is really important around this outbound marketing. And Jody, you want to mention a little bit about what outbound is and then why we think the inbound is so important?
Yeah. So when we talk about niches, I think it's super important to cite, hey, if you want to pick the cannabis industry, for example, as being your niche, and you want to really focus on that, you've got two different avenues. You can say, I'm not going to take any clients outside of that niche, or I'm going to focus my marketing on that niche. The way that we approached is we're focusing our marketing on that niche. Now, does that mean we won't take a trucking company or a law company or any other variable niches? Of course we'll take those folks, but that's not what we're focusing our marketing on. And as we've grown the company, we found about 60% of our client base comes from that niche that we focus on, which is the marketing niche. And so now the idea is, hey, do you want to focus on other niches? Maybe we want to go into real estate or whatever that might be. It's okay to have multiple niches. You just want to make sure that you're defining what you want to do. I think it's really tough for some folks to go from, having a general thing and saying, I'm going to get rid of all these other clients and focus on there. It could be a really hard road there. So you want to make sure that you don't just simply abandon everything else and go after it. I think it's important to focus on the marketing, and then you can eventually, if you want to say that's all I want to do is marketing companies, then you can gradually move away from the others. But yeah, don't go all or none right off the bat unless you have a really solid thought leader right away and going from there. Now, to address your questions there, Tom, that we really focused initially. We did a lot of everything. We did a lot of outbound, which we did like emails, and we did cold calling, and we did all kinds of stuff. And we found out over the years, none of that was really working well for us. And it wasn't really working well until we started really focusing on the inbound marketing, which was content marketing. And we started blogging, back, it was probably 2004, 2005 on a daily basis. And so we had a contractor that we had write articles for us. We reviewed all the articles, and we put them out as in blogs. And that blogs really kind of helped us really become that thought leader, because over time people will start reading that information and knowing that, hey, you're a thought leader. Now, what was a blog on? It wasn't just simply a tax article. We would take a tax article and we would mold it to, hey, these are the three tax issues that you as a marketing agency need to know. Well, of course, it's probably the same three tax issues that a law agency would need to know, or trucking company or whatever. But you focus your marketing towards that niche, and I think that's really important. And with that, we've done it so much that we've put so much content out there. in white papers, in books, actual books I've written, to small booklets, 50 or 60 page booklets, to really give this free information out to our clients or prospects so that they recognize that, hey, we're here to educate them and be that thought leader. And if they go through that and they still can't figure it out, then they would, reach out and give us a call. And so that's what the thought leadership is all about, is just really educating and being a blank slate to everyone and really kind of helping them out. And in the same process, it comes back to you in folds.
Yep, I agree completely. So going down to these last couple bullets, I mean, you have the ability to charge more for your service. You can imagine going in and saying, I've got 2 vendors, one can do it, one, this is who they work with, and you can charge more for that and be selective. You can get to where you have enough clients coming in saying, I want to pick the ones that are going to really work best within this system that we have. Mm-hmm. Ultimately, that can help you grow as a business. And I'll reiterate, when we talk niches to other CPA firms, the number one resistance seems to come up is, but I don't want to avoid, or I don't want to have others not join me because I've narrowed this niche down. I will say, with all of our years of going after these digital agencies, it's still about half or a little bit more of our business. So we still continue to have trucking firms and manufacturing firms and ones that are not digital agencies who think we do a great job. And I think we do. And we continue attracting them, even though most of our content has been really after that niche that we've described. Mm-hmm. So you see some of the tools off to the right that we have. I'll just mention a couple. You've got things like a HubSpot, which is a customer relationship management tool. So some way to really keep track of prospects. And as people go through having a really good process, we'll talk sales here in a minute. And the one, if you're not currently using, which I think is great, is Calendly. So a bit of a hack. Hey, when can we meet? Let me send you 5 times and you come back and tell me this back and forth. Imagine sending someone a link and just saying, look at this link. You'll see when I'm available. When you click the button, you're on my calendar. It is a so much easier way to get things organized than the back and forth on email that often happens. And that's the big way that we do that. Okay, so I do have a question here from Laura. With the current labor shortage and many firms needing to find help offshore, how do you find people to do this? Jody, you want to address the offshore piece, or do you want me to address the offshore piece?
Yeah, sure. We've been using folks offshore and nearshore for 10 plus years. And so initially it was, hey, how can we incorporate them to help us out with taxes and that sort of thing? And that worked out pretty well. It was one of those things you have to really kind of train the folks to do it. And just like anybody else, it's a training process and really working through it. And then from there, we added the transactional stuff. We started hiring college students initially, and we found out college students really didn't want to do the transactional work, paying bills, mm-hmm. receivables, and payroll. They would do it for a short period of time, but they got burnt out pretty quickly with that. That's again, just basically the nature of the beast there. And so we hired basically offshore and nearshore folks to do that, and it's worked out really well. To where I think we've got probably about 15 folks that work with us in various capacities, from marketing to project management to tax to accounting, and we're working on folks that hopefully we can train up to be even CFOs someday. So again, it's a great resource if you can't find help here in the States.
Yeah. Okay. So we talked marketing and getting your niche. So let's talk sales. This process is so important. I'll tell you the different steps, but why I think that we do a really efficient job and why I think it's a key thing for people. So from beginning to end, you can read through the capture, a consultation, selecting a package, SOW, all those things that are in there. Imagine having a predictable way that your clients can go through, but also a way that doesn't take a lot of extra time. So lead capture, someone's coming to us because of that inbound and saying, look, I'd like to talk to you. So you have this qualified lead. On our website, we've got the packages and average prices. The main reason is people who might be just kicking the tires but would freak out about the average price that we charge, they don't need to schedule a call. We don't want to waste their time, and we don't want them to waste ours. Number 2, though, this 1-hour consultation, I think, is one of the things I think we do that's somewhat magic, that in this 1-hour consultation, we're, of course, listening to the client as much as we can around, like, what brought you to us and what are you looking for? That gives us a chance to tell them how our services might match up to that. But then during that 1-hour call, we bring up on the screen our pricing tool where we're saying, let's go through this together. And we're adding in tax, and we're adding in payroll, and we're adding the consultation, the forecast, all the elements that are in there, and they can see the price. and we've got multiple alternatives. So at the same time where they look at that, go, oh, that feels a little bit steep. What if you took out this? Or quite honestly, what more often happens is I'm saying, I've got a great bookkeeper. I'm going to keep him. What can you do? And then once you they're like, well, what would happen if I did replace the bookkeeper? And so then we price that, and all of a sudden this great bookkeeper maybe doesn't look quite so good when they look at the cost savings that they have. The entire intent with that, though, is they leave knowing that price that's in there.
Yeah, and the really trick to that is making sure that the questions that you're asking to determine your pricing structure is something that the owner can answer. So don't get into detail, don't get in the weeds, how many transactions you have or anything like that. Is really something that they're going to have to go back and figure it out and then come back and tell you. And you want this to be a very good experience for the client, because you're showing them, hey, here's, we're really good at this. Here's what your experience is going to be in the sales process. It's going to carry forward onto the onboarding. And it's going to carry forward onto the engagement itself. And so it's really important that you put a good foot out here and make this a really enjoyable time for them. And Tom, it's kind of funny because I've quoted so many clients. We've already quoted,
Yep.
We're here in May, and we've already quoted maybe $5 million worth of services
Sure.
since then. And with that, I could say that I could probably say, 90% of them say, wow, this was pretty cool. I don't think we're going to go with you, but this is really cool. I love the process, and I love what you did. Or this is great. We're going to go with you right away. So they always like the process, and that's really the key there, is that we're showing the process. Another important thing I think to let everyone know is we record these conversations, and I think that's really important as well, because what it does, it gives you an opportunity on your follow-up email to the client after the call to send them a link to the recording, so they can then forward that on anybody else they needs to hear it, or they can listen to it again if they're quoting several different, from several different companies. But more importantly, I think it's great because if they become a client, then we can give this to the onboarding team. So the onboarding team hears exactly what the client had mentioned as issues that they might have, so that we're covering them. Also, the promises that I made during the call, they're hearing that as well. And so it's nothing new to them when they hop on the call. And Tom, I would say, being the CFO, well, what's the value that brings you on just on that reporting itself?
Oh, it is amazing. And to the point where I feel like I know the clients a little bit, because I've gotten to see them talk for a full hour. And now that first meeting, I can do things, and I can also make comments about, since you're going to be moving toward the, you decided you're going to get rid of the office. And there are times where they'll comment like, oh, it's great. That. They like not having to repeat everything they told Jody on to me, that I get this leg up. And it's also in a very relaxed environment. Now I'm not in front of the clients. I watch that. I can watch it a second time, take notes, just make sure I really understand what happened from there. You mentioned the pricing tool. We use it with existing clients also. I just had an experience with a client that unfortunately is going through a difficult time and said, hey, we might need to look at reducing some services. I said, let's pull up the pricing tool. And on the spot, we looked at what things we could change to do it. And his comment was, man, we need something like that. Our pricing is so much more difficult than what you guys do. And he really appreciated that in that 15 minutes he did it, versus sort of give me a heads up that this might happen. And as it they ended up keeping us at the same level of service that we were at before then.
Yeah, I think it's important that however you do your pricing, you set up so that as the owner or as the business development person, that if you quote that person, hey, here's the dollar amount we're going to quote you. And Tom, never having interacted with me at all, we go into that same presentation and quote it the exact same way. I think that's important, and that's what you want to come up with within the way you price it, so that it is transferable from one person to the next. And as Tom had mentioned, once it's through the sales process, our business development team never actually talks to the client again. Any kind of increases and so forth are held right from our CFO. They pop the pricing structure back up, and then they quote that person. So again, it just alleviates additional administration and so forth. And we're trying to make everything super simple and super transparent, super easy for the client.
Yeah, I agree. So as I mentioned, you get done with this call, and I'm sending that that prospect, Jody sent that prospect a message and saying, hey, here are 4 different things that we talked about. And you were leaning toward maybe it's number 3, and that included us doing your taxes. You'll keep the transactional things, but we'll do your forecast things. Let us know. From that point, the client can choose that service. Occasionally, they'll come back and say, do you mind jumping on another phone call? Because I thought of maybe a different scenario. And of course, we will do that. But they really have the information to tell us yes at that point. And then it's having a good process, setting an engagement letter and a statement of work goes out. They can accept it, and then we can start that engagement that's in there. So Jody, we got, I think, a really good question from someone, and I'm willing to take a shot, but I'll ask you to do it at the beginning. I won't read the whole thing, but Laura is saying, hey, for 30 years, I've been offering these kind of advisory services to clients, all sorts of things. I'm charging an hourly rate of $320. How do I go to a client who's saying I might be charging you a lot more, where they might say, wait, I've gotten these services all these years, so why are they going up for the same service?
Yeah, so one we don't charge by the hour.
Right.
That's one of the things that we had done away with a long time ago. So we came in and kind of analyzed the different companies that we worked with, the different service packages that we worked with, and we picked dollar amounts based on what we've seen the most common. Then we scaled it. We did a lot of analysis to come up with our value-based pricing. And then we price it based on, we scale it based on number of employees and revenue. So a company that's $1 million is getting charged less than a company that's $20 million. So it is priced there. And so that's a big part of it. Now, when you're quoting a prospect, keep in mind, you're not going to win every engagement. We win 30 to 40% of our engagements, sometimes even more. So there's going to be a portion of the folks that are going to say no matter what. So we have to accept that throughout this entire process. We're not going to win them all. And so when we go into it, it's very common that as we go through and build that value, usually it's niche oriented or whatever. What we're finding that clients, will say, hey, our CPA charges a lot. Maybe it's $15,000. They tell us how much, $15,000, whatever.
Right.
But you really get our industry. You really get it. I really love what I'm seeing here. They're willing to, and then the price is $90,000 or $80,000 or $120,000. You're like, hey, let's go with it. It's kind of amazing how often that actually does happen, where they emphasize how much they're paying and they think they're paying a lot, but we really get it, love the process and so forth, and they're willing to pay a lot more. Now, the value or the magic in not charging by the hour is the client knows exactly what to expect, the dollar amount and so forth. And it makes it so much easier for them to agree upon that price, and which is the nice thing. Whereas if we charge hourly, it's all smoke and mirrors at that point, and the client may or may not see that value. It's a little bit harder to close the deal, I think, at the beginning, and there's just a lot of barriers in there. So I'm not 100% sure if I'm answering the question, Tom, but I think it's important to really focus and work on a value-based billing system when it comes to this type of service versus an hourly. Now, and I just said that, but the only time that we go hourly on this is once we get to the LOI. So once we get to the LOI, at that point, we still charge on a weekly basis, but we'll add additional revenue based on hourly at that point, because LOIs can take you all different places there. And maybe multiple LOIs.
Right. And that's just to clarify, when someone's selling the business, they get to that letter of intent, then you've switched more toward due diligence kind of things. I think you answered it, Jody. The only thing I would add is, if you're out, so in the Laura's question, the hourly rate's $320 an hour. I think at a flat rate compared to that, you are going to probably be charging less to your clients. That's a high rate, especially if you're adding in accountants and senior accountants doing the work. You don't need that higher rate for the work that they do. And I would also think of what services are you offering. You might be on a place with kind of, hey, whatever you ask, if you want an insurance question, I'll charge you for that or this or that. You're now offering a package. I'm going to maintain a forecast for you. Once a month, we're going through financial statements. I'm going to look at your sales process. Here are all these things that hopefully the client is saying, this is a lot more for a similar price or maybe a little bit more, but they're seeing the value that's in there.
Yeah, and I'd also add that we try to achieve a 75% gross profit per client. So whatever we're charging a client in revenue, we want to have our direct costs related to that client, which is typically the software that's being used, well, not software, but the hours being used for the team members, because we do track hours for that purpose. We want that to be at a 75% profit margin, which is very comparable to any CPA firm out there, what they would charge. And so I would say that you can still be super profitable with clients. We get clients that are 90% profitability, and we get clients that are 50%. We've got to accept that, hey, we're going to get both so that we average that 75%.
Yeah. So then Debbie asked one other question about price there, right? Hey, do people see the prices of the individual services are a total? And I'll say, well, it's sort of both. That what we show them is the total. It's going to cost, for example, $2,000 a week. When they say, though, what would happen if I added accounts receivable to that, we can turn that from a no to yes, and they'll see that the price jumps by like $300. And we'll say that made your price jump by $300. And so you can work down to know what it is, but we don't specifically say, hey, here's a line item menu and every single thing that's on there. But they get a good idea what prices are, and we don't hide that for them, from them, that, we'll show what those changes are.
Yeah, the reason we don't do that is because one, it just confuses, it makes everything more confusing. But the second one is that we scale based on revenue and scale based on employee count. So it's really hard to say, hey, it's $300 when actually their price might be $600 because they're a larger company.
Yeah. So now we're getting questions about prices. I love all the questions. So thank you to people who are being interactive. So how do we price catch up and clean up work where clients fall behind? We'll talk onboarding in a second, where we charge more to onboard, but depending on the amount of cleanup, we do charge extra. And we've had some somewhat extreme examples. I know of a client that hadn't filed tax or done bookkeeping like in 5 years. Pretty extreme example, but where we said, hey, we're going to charge you for this work that we do. And here we already do, we expect some cleanup that we do in onboarding. And so it has to hit a certain level before we charge extra for that.
Right.
Yep. Okay. Let's see. Existing first discovery call. Okay. We have a first discovery call, typically an hour, and then we send a request of items to generate a 3-tiered subscription based on a proposal, a second meeting to review the proposal. Do we do a second meeting or just send them? What I would reiterate is usually in that very first call, we are giving the proposal. The client prospect has everything they need to sign up. If they want to set up a second call and talk about it more, we're happy to do that.
I would never do anything over just email. And the reason being is because the client can't answer questions. You may throw something out there thinking you're answering the question. You may throw a completely different, and the client could take it, a completely different way. And I just feel it's so important to have that interaction so that it's a unified decision on how the engagement's going to be formed.
Yeah. Yeah. And then Laura asked a question about the hourly amount, says so this does make sense for new clients. What about if you have existing business clients? I assume she means that you're thinking about converting over to CFO services.
It is what it is. So yeah, we just tell them here's our pricing structure for it. And we're not going to be hourly anymore, which again, a lot of them will be thankful for, to be honest with you. And, here's the new structure. We'd love for you to do it, and we move them on to it.
I think that'd be the same. And if I had existing clients that were not on the CFO, I would think that I would start with saying, hey, here's this new offering. Would you like to switch over? Mm-hmm. Some clients may say no. And then I would hope to get to the point where my CFO services are big enough where then I'm eventually turning to clients and saying, look, this is the way we're going to work. So either let's go with the vCFO or let me get you to a different firm because this is the direction we're going. I could see that kind of progression.
We did do that in the beginning. So that's exactly what we did do, Tom.
Okay.
So we had all the new clients were on this new program. The old clients may have been done a little differently, and we gradually migrated them over to it, or they dropped off. Yep.
Okay. And the last one is I'm transitioning out of the sales. Can you reiterate, Jody, what our closing rate is for our prospects?
Yeah. Right now, our closing rate is about 35 to 40%. And it's been pretty consistent year over year for the last 7-8 years. It used to be a lot higher, and we had to increase prices to bring our closing rates down. And so then 35 to 40%, we find is a pretty magical number for us.
Yep.
And the average client right now is about 89,000-ish in total fees.
Yeah. Perfect. Okay.
Here.
So a couple minutes left. Let me go ahead and go through this. So, okay, you've won the work and you're going to deliver services. So let me jump through. This onboarding is maybe one of the most important steps that we do. So to go through a couple things, you're setting this clear path that we're going to follow, that you're walking to the client saying, look, we've done this before. Here's how we're going to do things from get us access to information, to learn about your business, to set up things, to take over services. This really also helps manage expectations as much from here's how we communicate with each other. We like to talk to people about batching work. And so we're saying, hey, if the bookkeeper was sitting in the office next to you and you bug them constantly, here's how we do things. You can send us messages. We do certain things like we'll do your AP invoices once per week. We'll meet with you once per week. This is where the questions happen. And that way, don't expect like 20 times through the day to be communicating, setting kind of those boundaries for how we work together. Talk about what the value is, start that consulting, advising relationship that we have, and then make sure that you've got something scalable. So doing that, all that onboarding. We didn't mention the pricing. We charge double during a 6 to 8 week period when we do onboarding. If it goes longer than that, we don't continue charging them. But this is saying we are bringing extra resources to make sure that when we come out of this, we can deliver your service. And clients know that up front. And we do add multiple resources to really get everything up to speed and going.
Yeah, and to answer the question before, also, if we have a lot of back work, prior year stuff, we will charge even more than that. So it might be 3 or 4 times the fee, the regular fee during that first 8 weeks.
Yep. So having a successful kickoff meeting, I won't go through a lot of details, but really planning when you have this first meeting that the client feels like you know how to do this. Here's what you should expect going through the entire process, who the team members are, how we'll communicate with you, how this is going to work, what you should expect is just such an important part of that. And then we got 5 different parts that we go through in their finances. And Jody, I think we'll spend a lot of time on this slide before we jump sort of toward the outro area. But one of the big areas is cash. So both short-term and long-term cash that we look at with clients, we have recommendations around reserves of cash, and we help them measure that and really dig in and understand the cash pieces. We offer a cash flow service, which is very short-term, kind of the next week up to 13-week forecast. What has to be collected, what has to be paid. If you don't have the money, let's really be specific about what we're going to do to help ourselves from a cash perspective. And then forecast. Most of our services really lives on top of this forecast, and this is an ongoing dynamic forecast that we build with the client where we have a scenario for their work. At our vCFO service, at least once per month, we're with them on the forecast, drilling in and looking at this. It's both the income statement and balance sheet. I'll make a comment about tools. Excel is great for doing an income statement forecast. It's dangerous to do a balance sheet forecast because as you're trying to resolve cash and things, you'll spend more time trying to get it right than you will just using it. So things like Giraffe, PlanGoo are great tools for doing forecasting, but this is our clients are seeing the forecast in front of them where they're saying, what would happen if I reduced a team member? Well, let's go ahead and take them out and look at the forecast and see what happens. And if your revenue changes. And the whole goal is when I walk out of the meeting, I don't have homework to do. They have seen the answers to their questions during that discussion. Jody, you want to talk about financial results and how we consult?
Yeah, financial results, pipeline, and revenue rec. Those are other meeting cadences that we have. The financial results, again, we spend 15 minutes or so when we're talking about, we're going over the financials. We're not reading line by line. Please do not read line by line stuff to clients. It just bores the heck out of them. Hit the main areas that there's some issues that you may want to talk about, but keep that at a very high level for the client. And then the rest of that meeting should be done with, based on the forecast and so forth. On the pipeline itself, a lot of clients, depending upon the type of client, if it's service-based, they're going to have a lot of, it's going to be fairly simple. If it's, you want to track, hey, you created this great forecast, you have the cash goal set, you get the financials all lined up, and so that you can actually compare to industry averages. But when you get to the pipeline, you want to make sure that the pipeline supports that forecast. You may have to adjust the pipeline numbers or the forecast numbers in the near 1 to 2 months to adjust for if you have a high pipeline or a low pipeline, or if your pipeline's not adequate or over adequate. It may say that you're going to need to adjust your numbers up or down. So that's the important part about the pipeline. So make sure that you have a meeting to kind of go through the marketing and sales part of it. Revenue is important. We have a revenue rec meeting so that when we're looking at all the invoices for that month, they're actually done on a accrual basis so that we can compare the KPIs in the right period of time. So when we're comparing expense and revenue, we're matching up perfectly versus a cash basis where it's just simply a timing issue. So we have a rev rec meeting, which kind of goes through that short period of time, which goes through the invoices that we've got. And so all these meetings are labeled, and that's the big part of it, so that the client knows who should be attending the meeting. Like if you've got the rev rec, probably that's where your business development person is, or maybe a marketing person. Maybe they don't need to be at the forecasting meeting or the financial result meeting. Maybe they don't need to be on the weekly cash call. So it really defines what the meeting topic is going to be, which I think is really important for clients and for team members. But it also tells you who needs to really be at that meeting.
Yeah. And as people get the slides, you'll have details behind this, including what we suggest as the meeting sequence. And I think that's a really key part of what we do, is that we go ahead and schedule these meetings so clients know what's coming up. So when they have the idea of what if I add a team member, they know the forecast meeting is coming up. So then they'll say, hey, can I see that in the forecast meeting? And you're not constantly saying, let me run a scenario. So Jody, let me jump to these slides. Let me get to another couple questions. Paul, I'll answer your question about do we offer coaching services in just a second. What key factors do we focus on during the consultation to determine pricing? Do you want to mention, Jody, a couple of things that are really important where we ask the client to understand to give them a price?
Key things that we look for is really We ask them about the accounting stuff, hey, accounts payable, receivables, all the CAS 1.0 stuff that you hear about. To see if, hey, is that something that we are going to do, or if that is something we're going to oversee, or if the client's going to do. That's a big part of it. Taxes are another part. Are we going to do the individual taxes, business taxes, sales tax, all that kind of stuff? Yes or no. And so that's a big part. And so then determining whether or not whether or not they're going to want more of a historical looking consultation is just simply, hey, are they looking only for the financials being buttoned up? They're really not looking for us to go forward and talk about the future. They just want to see how they did. That's one level. If they want us to go and actually work and talk about the future, hey, the cadence, they want us to, talk about, hey, all the modeling and everything, but they don't need to, they're not big enough, or they don't want us to do it on a regular weekly basis. That's another level. That's what we call our controller level. You can call it red, yellow, green if you want to. And then the third level is, hey, do they want us to be part of their weekly meetings, with their leadership team? Do they want that level of service? We're actually part of the decision making versus more reactive on the control, on the second level there. So all three of those factors you're asking questions about throughout, and then giving them the scenario. Just, say, if you want us to be part of the weekly meetings, and you want us to do payables and nothing else, or no accounting whatsoever, and then the tax returns, or whatever that might be. Every client's the venture is a little different, but we give them the side-by-side comparison during that call, so they can see, it does make sense. It makes money sense, as well as it makes, common sense for us to be part of that weekly meeting, or it doesn't because, we just don't have that weekly meeting. I would rather you just meet with us once or twice a month. And so those are the types of questions and so forth that we're trying to ask the client so we can get them in the right package to provide the level of service that they want. The worst thing you can do is put them in the wrong package, because then they're going to be unhappy.
Right.
If you oversold them and they're meeting weekly and they're $1 million company or whatever, that you did the client a really big disservice. If you, on the flip side, if you do the opposite, where you say, oh, we're going to meet with them once a month and to save them on cost, but they're expecting this high level service, you're doing a disservice as well. You're going to let yourself down and the client down. So make sure that you work with them and put them in the right level of service and charge appropriately for it.
I agree. Okay, so let's move on. The remaining couple questions had to do with, do we offer coaching and other kinds of services? So let me tell you a couple different things you can do. We hope people want to keep learning. We have a couple different podcasts. The one I'll mention here is the Modern CPA Success Show. So Adam, Jody's co-founder, and I facilitate this and have a lot of conversations about kind of future CPA profession. I think some really interesting topics is one way to learn. A little bit more interactive way to learn is the CFO community. So a Slack channel where CPAs are getting together and discussing concepts, ideas. We answer questions in here. We'll answer questions about tools, all sorts of things that are in here. And I think this is the main question people are asking is, do we still offer a specific coaching program? So we have the Virtual CFO Playbook. This is a 15 module course where you can get 24 CPE credits. So it's a fairly intensive course. It is taking people through, though, exercises to get you set up to actually offer the CFO services. As you complete this, you can get a 1-hour coaching session with Adam and I, where we can talk about your circumstance and what you're trying to do. We also have a weekly, what we call a fireside chat. So a Zoom call where other accountants come in and they're talking about how their experience offering these services. Totally free. I facilitate that discussion. Many of these individuals have paired up with each other and offered services, and then we're offering and getting answers to questions. And then you're part of the CFO community. So I would encourage people, if you're really looking for some guidance and help doing that, this is an excellent course that can help people do that. And the last thing I'll close with is, if you're saying this all sounds wonderful, can I just join you guys? We're always looking for great people. So here's a plug. If you want to come join us, please let us know. And we'd be really excited to have people joining us. Jody, the very last question I see open is this service able to be outsourced? And I think what I would say about this is, I think the whole thing is difficult to outsource as CFO. There are definitely parts, and we talked about outsourcing some of the transactional elements to overseas areas. You could also say, if you don't want to do tax service, for example, could you find a partner firm to do tax service? There are elements that can be outsourced. I don't think the entire CFO service is probably something that a firm would say they want to outsource the whole thing.
Yeah, it could be done, but it really gets to the point where whose relationship is whose relationship is the client, who owns the client, I guess, where it comes to that. So if that can be wrestled around a little bit and solved, then yeah, it could be. But that's where the difficulty sometimes comes into play.
Yeah. That's great. Well, Jody, thank you very much. I hope for people this gave them a real good idea of saying, okay, if I wanted to launch this year, what are the tools that are there? How would I go ahead and sell this and create a service around here? And then how would I deliver? And the final slides had to do with you want to continue learning more about that. Here's how to continue staying engaged and learn more about the process.
Yeah, and keep in mind, we went from a tax write-up, only type of firm to a larger vCFO firm only providing this service. And we've been doing so for the last 20 years. And so if this is the path you want to go, I hope we've given you kind of the blueprints to kind of help you get there. And feel free to reach out to either one of us if you have any specific questions, about that. My email is jody@summitcpa.net. And Tom, your email?
Yep, Wadelton@summitcpa.net. And I think we have that. If I'm jumping back up here on the intro slides. Yep, there we are. We don't have it on here, but you can see the spelling of our names is on there, and first initial, last name @summitcpa.net will get a message to us. Mm-hmm. Great. Thanks, everyone. I hope everyone has a fantastic day.
Thank you.
Thanks, Jody. Bye.